So just quickly go through this, all of you. So let's account for each and every transaction. The first one says gift from mother in the form of jewelry, rupees 2 lakhs. So mother, what are the rules pertaining to gifts? So you have to quickly recall the rules pertaining to gift, as I've already discussed this, that in gifts you have three categories: gifts from relatives, non-relatives, gifts on special occasion. So gift from relative is not taxable. Gift from non-relative is taxable if the value of aggregate gifts during the previous year exceeds 50,000, and gift received during special events or specified events is also exempted. So here it says gift is received from mother. So mother comes under the definition of relative. So where will mother fall in this category? So mother will follow under the category of ascendants, right? So ascendants includes your mother and father, your grandmother, grandfather, both maternal, paternal, great grandparents, all will come under ascendants. So since mother is a relative, so gift received from relative is not taxable. So let's write down the transaction. So let's move on to the next transaction. Gift in the form of plot of land received from a non-relative by will. So here it is specifically mentioned non-relative, and here the gift is land. So in case of non-cash gifts, how do we ascertain the value? So in case of immovable property, we have to go with the value mentioned in the agreement, or the stamp duty value also known as. So here the value is already given, so you don't have to break your head. It's already mentioned. Otherwise, we have to follow this rule which is mentioned here. How do we do an assessment of value of gifts? If the gift is immovable property, we consider the stamp duty value of the property. So stamp duty value, we don't have to bother because the value of the gift is already given. So as per the rules, gift from a non-relative is taxable if the value of the gift exceeds 50,000. So here it is directly mentioned it's a non-relative and the value of the gift is also exceeding 50,000. So in such case, the entire amount is taxable. But what you have to also see is, because there are three categories of events: one is gift from non-relatives, gift from relatives, and gift received during specified events. So is this a specified event? The answer is yes, because this gift is received under will. So under will comes under a specified event. So specified event, gift received during specified event, taxable again. Let's go with the third transaction now. Gift, which is in the form of a portable TV, is received from a cousin. So cousin a relative or not? So the answer is cousin doesn't fit under the definition of relative. Cousin here refers to either your mother siblings' children or your father's siblings' children. In other words, so when we say cousin, it means your mother's brother and sister's children or your father's brothers and sisters' children. But cousins do not fall under the category of relative. As you can see here, it says brothers and sisters of associate or brothers and sisters of spouse of associate, but nowhere it says children of brothers and sisters of associate. So therefore, cousin is a non-relative. So let's write here from cousin. So cousin is a non-relative, and gift received from non-relative is not taxable. Non-relative is taxable only if the value of such gift exceeds 50,000 during the previous year. So here, has the value of the gift exceeded 50,000? The answer is no. Value of the gift is only 8,000. Right? Next, gift. Her sister's friend gifted her a wristwatch. So gift from whom? Gift from sister's friend. Gift from sister's friend. Let's write down that. From sister's friend, and the value of the gift is 52,000. So now you have to note down some important points here. Is that as per the rules, when the aggregate value of the gifts received from non-relatives during the previous year exceeds 50,000, then the entire amount is taxable. So in this case, 60,000 is taxable. In this case, 60,000 is taxable. That is something which you guys have to remember. Up to 50,000 gift received during the previous year from non-relatives. If the value of the gift is 50,000, it's not taxable. But the moment the value of the gifts, aggregate value of all the gifts received from non-relative exceeds 50,000 during the previous year, then the entire 50,000 becomes taxable. So 50,000 is not the basic limit. Once the limit exceeds 50,000, entire sum is taxable. That is something which people have to remember. Okay, so let's move on to the other items now. Next transaction. Winning from horse race, net amount is given, so we have to gross it up. So what is the TDS rate in case of casual incomes? In case of casual incomes, the TDS rates is 30%. So write down 30%. So here net amount, the word net is used. That means the TDS is already deducted. And as per the rules, for any net incomes, we should do grossing. Similar to what we have done in the previous illustration. So let's take the equation from there and write down the data. So the value of the gift is 21,000 and the rate of TDS is 30%. So 21,000 needs to be grossed up. So 21,000 into 30,000 will be the net amount. So let's move on. He has taken a house on rent for 21,000 per month. He has sublet 1/3 of the house for 15,000. Similar to what we did in the previous question. So first we record what is the income from subletting, post which we deduct the expenses pertaining to it. So what is the income from subletting? He has sublet the house for 15,000 per month. Or okay. Per month is not mentioned, so if you could make a note in your hand and just write per month. So this will give you 1,80,000. So that's the income which is being generated from the. Now, in order to earn this 1,80,000, what are the expenses incurred by him? So there is only one expense here in this question. Unlike the previous one, we had a couple of expenses, but here there is only one expense. Rent paid, and as per the question, he pays 21,000 per month to the landlord. So 21,000 per month. What is the proportion of subletting? 1/3. So we have to allow all the expenses in the proportion of. If the entire house is sublet, then we don't apply the proportion. But if a part of the house is sublet, then we apply the proportional amount, which in this case is 1/4. So let's compute the amount. 21,000 into 12 into 84,000. 96,000. As I mentioned to you, any expenses pertaining to subletting has to be a portion of sublet. Entire house is sublet. You guys can deduct the entire amount. Part of the house is sublet. You have to find out the proportion and apply that proportion of sublet to the expenses. Cash found in his locker, and he could not explain where the money came from. So since he's not sure where the money has come from, no need to worry. Such income will still be taxed under the head other sources. Of unexplained income. He received 200 per lecture delivered, so guest lectures. So income from guest lectures. So he has delivered some guest lectures. The professor of economics, and these are his income from other sources. So when you go and deliver a lecture somewhere else, that can't be your salary income, and therefore it is taxable under the head other sources. So he has earned rupees 200 per lecture into he has delivered 22 guest lectures during the previous. 200 into that's it. You have only 8 transactions here. So we have counted all the 8 transactions. So the last step is to total income to the totaling now. So if you have any questions or doubts on this illustration, you can go ahead and ask your question. I'll just quickly unlock your microphones. So any questions, please raise it.
So winning from all this 2,10,000, sir. So it comes to 3 lakhs, 30,000.
Winning from lottery, I think it is 2,10,000. So let's change. So you have changed the total. So let's move on to the next question now. Illustration 3. So first transaction is, this guy is a member of parliament and he has received salary as member of parliament, and the amount what he has received is 1,68,000. The salary of member of parliament is taxable under two sources for a simple reason. There is no employee and employer relationship between MPs and government. MPs are not employees of somebody. MPs, MLAs, MLCs, they represent the government by themselves. So you cannot tell them that they are government employee. They themselves represent the government. Therefore, salaries of MPs and MLAs and MLCs is taxable under the head. What about daily allowances given to them? What's the rule? Now, daily allowances given to MPs, MLAs, and MLCs is exempt from tax. So here it is, salary to ministers. As per the rules, daily allowance given to them is not taxable, or it is exempt. Daily allowance and constituency allowance received by them, exempt. Agriculture income from Pakistan, taxable as the land is situated outside. Next, you have royalty from a book on poems. One from royalty is, as per the question, he claimed 2,800 as expenditure on typing and stationery in respect of the book written by him. He claimed, okay, that's the only expense pertaining to royalty. So deduct this expense pertaining to royalty. The expense amount 2,000. Next, you have cash found in his locker, the source of which could not be explained, similar to the previous question what we had. So if you are not able to explain the source, the income is still taxed. is 5 lakhs. Next, you have interest on recurring deposit, 32,000. So interest on recurring deposit, 32,000. What is the rule pertaining to TDS on deposits? Let's quickly review that. TDS on deposits. The rule is, as I mentioned while explaining you, TDS on deposits is applicable if the interest received during the previous year exceeds 40,000 rupees. Right? Deposits, the interest would exceed 40,000. If it happens, then 10% TDS is applicable. But here the interest earned by him is only 32,000. So this is not applicable, so we write the full amount. So no grossing is required. Interest on cumulative time deposit. Here also TDS is not applicable. You might be saying that here the amount has exceeded 40,000, which is the limit as specified here, right? Now this is not a bank deposit. For bank deposits, the rule of this 40,000 is applicable. Only if the 40,000 interest exceeds on deposits, if the interest on deposit exceeds 40,000, then the rule of TDS is applicable. But this is not a bank deposit. This is a deposit in TD, in post office. So for post office deposit, there is no TDS at all, right? So no TDS applicable for post office deposits. So we take the full amount. Next, you have rent from letting machinery and furniture on hire. Letting machinery and furniture on hire. What's the income? $20,000 per month. And there are certain expenses that needs to be deducted. Expenses. Reclaimed expenses as deduction with respect to machinery and furniture let on hire, which is 5,000 insurance, 5,000 repair, depreciation. Plus, get 2 lakh. Dividend from domestic company, as you are aware, dividend from domestic. Winnings received from Rajasthan State Lottery winnings. 70,000. Net is mentioned in the bracket, so that means the amount is received after deduction of TDS. And multiply TDS and gross it, you get 1 lakh. have only 10,000. So TDS is applicable for up to rupees 10,000. Remember, and this is very important. We do TDS only if the word net is given. In case, let's say, this word was not mentioned here, then we assume that the amount which is given here is already after grossing. So only if the word net is mentioned, you do grossing, otherwise you don't do grossing. So that's the simple assumption what you people have to follow in the examination. The transactions, let's do the totaling. So this will be other sources. So let's do the totaling. Lakh 68 plus 1,50,000 plus 37. Get 12,58,000, 200. Just cross check once. So with this we complete the third illustration and we conclude today's session also. So any question and doubts, go ahead with your questions and doubts if you have any.
Excuse me, sir. Sir?
Any questions, anyone?
Sir, I have a doubt.
22 from A section.
Yes, sir. Sir, interest on
I'm not able to hear you.
recurring deposits, it should not.
Can you repeat again?
Yes, sir. So you said that interest on recurring deposits, if it is more than 40,000 is what you calculate TDS.
Yeah. So what happens is in case of bank
So, but if
deposits.
sent out, it's given as if it's more than 10,000 only, then you calculate TDS.
Yeah, so that's what I said at the time of explaining. You had asked you to make a correction because that 10,000 what you see is for the previous batch. That means your juniors, I mean your seniors who have passed out. For your batch, it is 40,000. So please make a change, all of you. I request you to make a change. Or material or somewhere in your notebook, you just make a change here. That for your batch, it is 40,000. And in case if it is senior, then this amount changes to 50,000. Senior citizen gets little more benefit. Add this in your notebook, or if you have taken a printout of this handout and just make a change there. So this TDS is applicable only for bank deposits, which includes your recurring deposit, fixed deposit. But in this example, as you can see, we also have one post office cumulative time deposit. So for cumulative time deposits, the concept of TDS itself is not applicable. So TDS is a concept where the provider of income is liable to deduct tax from the person who is receiving the income on his behalf and give it to the income tax department. Okay. So another important assumption which you have to make a note is that we do TDS, we do grossing. That means we add back the TDS only if the word net is mentioned. If this is not mentioned, don't do grossing at all. Okay, so only when the word net is mentioned, you do the grossing. Otherwise, don't do grossing. This is the assumption which we are following across all the sections A, B, C, D, E. All the teachers have decided on this, that we will follow this so that we can avoid confusion in the examination. Are you clear?
Yes, sir. Thank you.